back. Where are we now with the year-end target, and what are your thoughts on the price action we've seen over the last week?
Well, look, Jonathan, I think, pushing above 3% would be a great opportunity for investors to put money to work. We're still below 2.5% on the 10-year. That's where we think it ends the December. I mean, look, we still have a long time between now and the end of the year, and there's a lot that can happen in the economy, not only in the United States, but also globally. I think at the end of the day, when you look at a 3% 10-year yield, you really want to understand what's in that price. What does that mean? And when we look at term premiums and rate expectations, these look too high. I mean, term premiums are low, yes. Rate expectations are still quite high.
So let's talk about what's sort of making up that repricing of the 10-year yield over the last week or so, the last couple of months. Is it inflation expectations? Is it new supply? Is it a recalibration of the term premium? What is it?
Yeah, so when we look at the decomposed nature of the 10-year move over the past couple of weeks, we see it's mostly a rise in break-even inflation rates. I would chalk that up to be a little bit of inflation risk premium coming back into the yield curve. Bear in mind, we're going to have core PCE inflation very close to the Fed's 2% target already. And this is something that was earlier than expected. On our forecast, we didn't have core PCE inflation hitting 2% until closer to the middle part of the year. We're already at 2%, so I think you have a little bit of inflation risk premium coming back into the market.
So, Tony Despirito, if the Treasury market reprices the way it has done, I imagine this makes dividend stocks look not so great over the last couple of weeks.
Yeah, so what I think is important within dividend stocks is there are two types of philosophies. One focuses on a high current yield, and then the other, like ours on the BlackRock Equity Dividend Fund, is to focus on dividend growth.
Right.
And the power of that is if you look at companies that have paid and grown their dividends over time, they've outperformed even in reflationary environments, and they've done so with less risk.